Good morning. I'd love to extend a really warm welcome to you, Pim Vervaat, the CEO of RPC Group, as the latest guest in our series of Meet the CEO. RPC Group is, I believe, the leading designer and manufacturer of plastics containers on maybe 112 manufacturing sites in 28 countries throughout Europe and the UK. Prior to joining RPC Group, you excelled at metal producer Huygens Group, first in 1987, then again, I believe, in 1999 when it was acquired by Chorus. And then after that, there was a very successful sojourn at Lips Group, the Dutch shipping propeller producer. In the last 9 years, Pim, with you as finance director, and then more recently as CEO, RPC, you've knocked the market dead. You've had a fantastic run. The business, I would venture to suggest, is not a management role, it's an innovative role. And the plastics industry is relatively immature in comparison, going back to the old days of ES&A Robinson when it was cardboard, and more recently with Rexon when it was tin, before being sold to Ball Corporation. Your shares, since you took over, are up 291%. And I know it's only going to bring a wry smile from me, but I venture to suggest that you're not a million miles away from entering the FTSE 100, which would be a phenomenal achievement. You are clearly very focused and relentless in your quest to create a company of excellence in both design, manufacture, and the distribution of plastic receptacles. As I understand it, people like Deluxe, inhalers, ketchup bottles, they're all amongst your thousands of customers. I'd like to kick off with a couple of questions before handing over, if I may, to Simon French, who, as I always describe, as the meat and potatoes of the interview. You've made half a dozen acquisitions in recent years. It appears that the shareholders trust you and the board's ability to identify value. What can we look forward to in terms of acquisition going forward?
I think actually more of the same, hopefully. It's always difficult to predict, but we are operating in a European market which is consolidating. Our market share in the richer plastic packaging side of things is 5%. In the polythene films is also less than 5%. Worldwide it is less than 1%. So what you can see, driven by multinational customers and driven by a generation change in the plastics industry, this consolidation game in Europe in the first instance is going to continue. We try to be very selective as RPC, so yes, we have done a number of acquisitions, but we've done tenfold more. We haven't done the acquisitions because what we're looking for is where we can add value. Critical to understand in the industries where we operate, it's not a big homogeneous industry. You've got a multitude of end markets, multitude of technologies, and you need to, well, like fund managers pick stocks, we try to pick those segments where our skill in terms of plastic conversion, in terms of polymer buying really come to fruition. So hopefully more of the same, and I know there's a steady pipeline of opportunities both within Europe, where we aim to grow larger market shares, as well as outside of Europe, where we also are selective, but our multinational customers continue to pull us. We like what you do in Europe. Can you do that in other parts of the world?
Okay. Now let's move on a little bit. RPC's recent acquisitions of British Polythene Industries moves you into flexible plastics, having built the business on rigid plastics, as I understand it, while the acquisition of GCS expanded your footprint within closures. What was the thinking behind acquiring these, I'll get there in a minute, these businesses? Diversification, attractive valuation, or some synergies that you were all ready to exploit?
Probably all three of them. We define ourselves as a design and engineering company in plastic products, both packaging and non-packaging. Would like to say this was a brilliant idea of the RPC board, but actually we're following suit of some large international successful players like Berry and Amcor, also combined flexibles and rigid. So it is an opportunity there. I think ultimately in our part of the supply chain, scale does matter. We've got customers who continue to grow. We've got a large consolidated supplier base in raw materials. Size matters. We're not acquiring for size's sake, but if we can deploy our skill set in good end markets in terms of skills in polymer buying, skills in conversion technology, then I think we should take that opportunity. So we're not the first to do this. We're one of the few, however, to do that in Europe. And I see, and you can see that from the value that these deals generate, they actually are quite a good generator of value. One of the common things people say, yeah, but are you not going off-piste? Do you not stretch the management too much? If you buy a quality company, we have a great track record of retaining the quality management. We plug them into the RPC Group, say to them, well, we can give you access to capital, access to buying advantages, some best practice, some customer contact, so you were good before you entered RPC. Hopefully we can give you things and you'll even be better thereafter. So I think it's something which enlarges the areas we can look at, but it has a very common skill set, which I do think our teams are particularly good at.
Great. So,
I'd like to pick up on the BPI acquisition, because you identified shareholders at the time, about £10 million worth of synergies that you could exploit. Now you're inside the business, you've seen what you bought. Are you confident you're going to outperform on that? Any teething problems? What's your initial impression of what RPC has acquired?
Yeah, I've been around the BPI business actually over the last 2 weeks, and I'm very favourably impressed. Very good management teams. It's well invested. Still early days to say where will the synergies end up at, but I'm confident we'll get to £10 million at least. That we've declared, but we'll be looking, as we've always done. We say, well, we declare to the market what we know we're going to get, and I think that is basically confirmed. But of course, we're looking for upside, but it's still a bit early days. We're 4 weeks into it, but we're working hard on identifying what the next step could be, and we'll update the market when we say, yeah, we know what the next phase could be.
And I want to move you on now from acquisitions to what I know you're really passionate about, which is innovation. You have more than 1,000 patents across the business, real development in both technologies and design. How do you manage to blend the fact that you're trying to grow the business through acquisitions, but also prioritize being a real leader in terms of your research and development?
Well, it comes back to what I said earlier. You've got a diversity of end markets and technologies. You should not mix your drink. So we operate in very decentralized structures with strong management team focused on their specific technology and or end market. We've got well over 20 design centers, and we've got very good engineers. We've got very good R&D people. So as long as they keep focused on their markets, and we buy quality companies which you plug in sometimes an adjacent sector alongside them, it doesn't disturb them from having to further develop. And I think that's the one thing also through the financial crisis. RPC has always said, well, we continue to push the boundaries on engineering, push the boundaries on product designs, because that is the lifeblood of the business. If you just start to run for cash and you say, well, we'll not further develop, then I think you can become just that, a cash cow, which is clearly what we're not trying to do. And what I said earlier, we're trying to pick those segments where we can really add value, because there are segments in our industry where the product is really, there's not much new development, the engineering's pretty much done, but there's so much more to go. And you can see that plastic is continuing to grow faster than the competing packaging materials, and that's because of its innovation, its lightweighting, the different shapes and forms you can make. So I think it's critical that we keep pushing the boundaries and stay on top of things on innovative design and engineering.
And you mentioned cash generation, and that brings us quite neatly to something that I know shareholders are very confident about, which is the dividend yielding about 2%, but actually it's the fact that it's almost 3 times covered when the market is about 1.5 times covered, and people concerned with pension deficits, with stretched dividend cover. Yours tends to be quite a strong story. What's the 3 to 5 year view on how you can grow that dividend?
Well, we're very proud of our dividend policy, which basically is a progressive dividend policy through the cycle, covering around 2.5 times the earnings, and that's what we have done to date, and I think that's going to continue, because we do recognize it is important for our shareholders. So expect more of the same, progressive dividend, 2.5 cover throughout the cycle.
Now, Pim, you're talking to 2 people who are on very different sides of the referendum debate that's just taken place in the UK. And you're an example of a highly talented European coming to work in the UK labour market. What is your reflections a couple of months on from the referendum in terms of what that means initially for RPC Group, but also for the wider UK and European economies?
Well, first of all, for RPC, I think our position is actually quite robust. RPC has always been able to respond well to economic shocks, whether it be caused by Brexit or any other event for that matter. Of course, the consequence of the Brexit has been a cheaper pound. Around 25% of what we sell is in the UK. We do compete with imports from mainland Europe, so our competitive position has actually improved. We are still about 2% of our sales a net exporter from the UK into mainland Europe, so again, our competitive position there has improved. So I would hope that the improvement of competitive position would offset the short-term reduction in growth rates that you see across the business. Of course, more than 70% of our earnings are outside of the UK, so there will be a translation effect when we report in pounds. And finally, in terms of our roll-up strategy in Europe, I do think we have a better chance of deploying that in times of macroeconomic uncertainty when compared to when things are going really well for everybody. So I think RPC will come through all right. In the wider prospect, I'm probably siding with you, Simon, on that part of the debate. There's a surprise. I do understand people's frustrations with Brussels. Assure me I'm Dutch, the same are there in the Netherlands. But I think we've introduced now uncertainty in Europe. It's not just the UK, but it's also mainland Europe. So I think what is quite critical is that the UK government comes up very quickly with what does Brexit actually mean. Secondly, there have been another couple of developments which adds to the complexity of is the UK the right place to go for foreign direct investments, which is this governance, what does workers on board mean, and that needs to be clarified, and what does this industrial strategy mean. So I do believe in resilience of people. I think Europe, UK will come through this. But there is an urgency, I think, to clarify what does Brexit actually mean in terms of access to the single market. Are we changing the governance rules in the UK? What does industrial strategy by the UK government actually mean? Yeah. So that is, I think, needs to be clarified. The sooner that is clear, the more I think people are resilient, businesses are resilient, they get on with it, so to say.
And I'm reassured by that. I can see that you're already thinking somewhat beyond the immediate impact of Brexit. And that brings us again to your Vision 2020 and actually the next stage beyond that and how RPC grows and develops. Perhaps for people less familiar with the RPC story, can you just talk us through how that, beyond 2020 vision is being established in the boardroom and when it's going to be unveiled to shareholders?
Yeah, the Vision 2020, which basically is growing organically based on innovation, very key as we just discussed. Secondly is consolidating Europe, but selectively. I mean, we've done 10 acquisitions over the last 3 years, but overall 200 we did not do. So we do want to get to the higher added value part of our industry. Thirdly, it is going outside of Europe, not because we think we are world beaters, simply because there's a pull from multinational customers who say, well, we want you to be in North America, want to be in Asia. So it's a niche strategy outside of Europe. Now that has certainly some miles to run, and we're not in 2020 yet. But I think the contours of the next phase is starting to shape, which is a global consolidation game. You can see that has happened in metal, glass and paper. I see no reason why in plastics that ultimately would not happen. And if and when that happens, I want RPC to be a very strong European company, innovative, with a good network around the world. Mm-hmm. And who will initiate what will happen then, I don't know yet. But that is the strategy which already at the board we're saying, well, what's beyond 2020?
Can I just chip in there, Pim, if I may, by just saying that what comes across very strongly to me is that RPC is in a very strong position, which more or less endorses what Simon and you've said, as an innovator. And that you are number one in the field, which means despite all the political turmoil and the potential economic turmoil, you're extremely well placed. Tell me about that age-old adage, the art of good management is delegation, because I think that's quite an important thing that Where I see very strongly is that you obviously have the huge respect of your management and staff. And that's a key component for you keeping RPC rolling on, isn't it?
Absolutely. I mean, the diversity of the end market and technologies necessitates a very decentral management style. I always say, as long as I'm CEO of RPC, there will not be a commercial or a technical director at group level because of the diversity that is there, because he or she would just not know enough about the competitive dynamics and the technical details of all the different end markets that we operate in. So quite key is to keep it decentral, make sure that, I mean, it is like fund manager picking stocks, we pick market segments and the teams to do it. So we are, in that sense, I think, very entrepreneurial. We're shaping the structure of this industry, and we have to be nimble and fleet of foot. Otherwise, we bog down and we look too much in the past rather than going forward.
And I mean, the success was recognised in winning the Company of the Year award at the PLC Awards. For shareholders who are not on your register and look at where, and David mentioned it in his introduction, where the share price has gone, have they missed the boat? What are they coming on board for that'll see the share price go higher over the next 6 to 12 months?
Well, first of all, I think on the current projections, you can see that we still are a bit, we've got an undervaluation, so that could be, but I think that depends on really us delivering the goods, so to say.
And this is to your peer group?
Acquired the BPI, the peer group,
Yeah.
and generally also, I mean, we have had EPS growth of well over 10% for the last 3 years, and if you believe the analyst forecast, it will continue for the next 2 to 3 years as well. So we need to be able to demonstrate that we can deliver, and there's a possible re-rating. But over and beyond that, we just talked about what's beyond Vision 2020. Our market shares are such that we could be in a situation in 5 years' time that you're saying, well, do you remember when we were this relatively small size? You don't know, but I definitely see there is more to come. We will continue to grow organically based on innovation, push the boat out there, which will yield a growth above GDP when you take it through the cycle.
Yeah.
But in terms of shaping the form of the industry, I think that goes well beyond. And so far, we've been able to demonstrate we can create significant amounts of value by doing exactly that. And that's not stopped, and that should hopefully drive further value for the shareholders.
And David touched on your leadership style, quite comfortable with delegation to your management team that you trust. When you think about how you developed as a leader, who were the big inspirations in the early part of your career that has sort of framed your approach to leading a business like RPC?
Well, I've come from a finance background, so you go through the ranks, and there have been a couple of things which, through various people, have said that to me. But that is now very clearly what is very important to me. First of all, it's never I, it's we. I.e. teamwork and inclusive is very important. And second of all, you have to be proactive. You have to, from whatever function you are, you can't just say, well, I've done my bit. I've done the brilliant financial analysis, I've assessed the situation, yeah, that's fine, but that's just step one. You then proactively need to say, okay, how can you chip in to achieve the end goal? So buy-in, being proactive, I think as some of the things I've over time learned to really grasp and say, well, that is very important. It's we and being proactive. Don't be afraid to make mistakes, because if you play everything safe, nothing happens.
The one thing that I've enjoyed enormously is that RPC has gone just like that. In the event of any kind of contraction, nothing to do with you, but world demand or anything else, is the company well placed to still maintain itself? And is it in a situation where it can cut back if it actually has to? I mean, I'm not wishing to put a negative spin on it in any way, but it's just very often when you look at a graph in a share and you've seen it, you think, that's absolutely wonderful, which it is. And it's the unforeseen.
No, I understand that. But first of all, I would say we got relative defensive end markets, so we organically, I don't think we'll drop off any cliff in that sense. And secondly, and we have seen that throughout the financial crisis, it's actually a very good background for a buy and build strategy. So you can actually accelerate in that area your buy and build, because when everything goes well, the valuation goes through the roof, and people are saying, well, actually, we can ride it out, we can wait another 2 to 3 years. Whereas if things start to contract, and you're still able to do a buy and build, you can actually, and we have seen that, we bought a company, which a brilliant company, and all the management team has stayed super fast for less than 5 times in 2011, which was one of the best deals. But in a sense, we got lucky because it was doom and gloom in the end of 2010 and 2011, and we were able to acquire them, extract value, economy recovers. It's been a star ever since.
And I guess a couple of final questions, and I just want to build on the unforeseen, because of course you're heavily exposed to polymer prices, something which is a global marketplace. Do you hedge your position in terms of the forward market? And similarly, you mentioned currency and the currency tailwind that may come in with the weaknesses of sterling in your results. Where do you position the business in terms of the commodities and the currency exposure?
Well, in terms of the polymer, I think we have a key competitive advantage. We tend to be larger size and very flexible in our polymer buying. So whenever we see, we compare ourselves with competition, when we acquire them, we have a competitive advantage, which is, I think, sustainable. So that is, first of all, important in terms of the competitive landscape. We do pass through our polymer prices variation to our customers. So we have done that, and we will continue to do that. And the majority is, or more than 50% is contractual. It's an industry standard that these polymer price variations move through to the customer base. So we are hedged by virtue of those kind of mechanisms. The only thing I would say is that typically it takes 3 months for it to pass through. So if you've got any reporting period of 6 months, either you had a bit of a windfall because it went slowly down, or you had a bit of a headwind in terms of you're still recovering the prices. But through the cycle, we definitely are hedged. The currency, we got some trading exposures, but I just said, well, 2% from the UK to mainland Europe is not that large. So I don't think we got too much transaction risk in the currency, but again, we report in pounds, so if you translate your foreign profits back into pounds, but we always pull that out of our results and saying, look, this time lag in pass-through of polymer is one element, and then we look at what is the FX translation impact, saying this is, then you can have a like for like, and what have we done with the result thereafter. So I think our shareholders understand that we're not a play on polymer prices, we're not a play on currency. It does impact our result. We highlight what the impact is, but we've got a long-term strategy which so far has generated value. And as I just outlined, I think there's still a lot more to come.
Has there been any discussion at boardroom level about vertical integration into the polymer producer space, or is that something that you think would distract from the core business or doesn't really present any advantages?
I think the latter, to be honest. It's already a consolidated industry in the polymer industry. We use a wide variety of polymers. It's a completely different game than what we're doing. We're trying to be nimble, pick our spots in the industry. Chemicals industry is all about capacity utilization, huge investments. So we are placed as a plastic converter, high added value, designed to added to it, supplying to brands. But not only the multinationals, we're very happy with the multitude of smaller customers. So we've got a huge number of customers which we're able to serve, who are not Unilever, who are not Kraft, who are not Heinz. So again, that calls for decentralized approach.
And I just want to wrap up with one final question. And I think what has come across to me throughout this interview is how much confidence you have in your senior management.
Absolutely.
But of course, nothing stays the same forever, and you will have some churn in the executive suite over time. What advice do you give either to new starters at the bottom of the business or indeed to senior leaders coming in that you think is the kind of advice that will continue those ethics and the culture that you've managed to develop at RPC?
Take initiative. So also for young leaders, I mean, we talked about the entrepreneurial attitude in RPC, which means that we're in an environment where if you take initiative on product development or whatever it is, you're not being cut down. Take initiative, don't be afraid to make mistakes, and then you'll do well.
Pim Vervaat, Chief Executive of RPC Group, it's been an absolute pleasure.